joining in. So I'm Steve Vachon. I'm a senior analyst within TBR's telecom practice. So I have my email address on this slide if anyone wants to follow up with me afterwards. So today we're going to be taking a look at things, including the current competitive state of the U.S. wireless market. We're going to examine key trends that will affect operator business performance in 2026. And we're going to see how operators are pivoting go-to-market strategies amid shifting competitive dynamics. Before we jump in, this is just a quick overview of TBR's research portfolio. So these are some of the reports that we publish on a quarterly, semi-annual, and annual cadence. Most of the content from today is going to be taken from the U.S. Mobile Operator Benchmark. So this is a quarterly benchmark TBR publishes. This benchmark compares how leading U.S. wireless operators are performing and competing, highlighting key strategies, financial and go-to-market metrics, and industry trends. So let's start off by taking a high-level look at the U.S. wireless market. So looking at this graph on this slide, so we're looking at the total U.S. wireless market from 4Q24 to 4Q25. So when we talk about the U.S. wireless market, so this is all wireless revenue generated in the U.S. from operators. So it's all operators, Tier 1, Tier 2, Tier 3. We include MVNO revenue in this market size as well. And it's all wireless revenue. So it includes both wireless service revenue and also wireless equipment revenue. It's taken into these market size numbers. So you can see at the growth rates, so it's been mid-single digit wireless market size growth over the past year. Looking at 4Q25, it was a 5.4% year-to-year growth to 84.8 billion. So looking at some of the drivers that are contributing to wireless revenue growth. So we still see connection growth continues, especially within postpaid and fixed wireless access. Looking at the postpaid phone market in 4Q, the net additions remain steady for the main operators in the market. Even though this market is maturing, there's still sectors that are still driving growth. One of the segments that we're seeing is a multi-line expansion. So you look at the multi-line accounts, we're still seeing a lot of activity with families adding their children to their accounts. That's driving growth. B2B is still a big area for the operators. One side of that would be just businesses providing their employees corporate devices. That plays into like security and privacy concerns. Providing an employee their own corporate device is more secure to access corporate data and applications compared to their own personal device. There's also some specific verticals that are particularly driving B2B phone growth, especially one of the main ones would be the first responder market still, like looking at FirstNet. That's a very strong business that's still getting several 100,000 connections a quarter for AT&T. T-Mobile and Verizon are also, those businesses are still very strong for those operators as well. And another segment that's beginning to drive some more connection growth would be gig workers. So these would be employees for gig companies, say like an Uber, DoorDash, Lyft. So we're seeing more of these type of employees. They're adding a second line to handle to manage their businesses while keeping just a separate consumer line for their own personal usage. So it's kind of an interesting area we're seeing growth in. Also in FWA, so we're still seeing a lot of growth there. Looking at 4Q results, both T-Mobile and AT&T, they actually accelerated their FWA net additions during the quarter. So strong growth both in consumer and business. On the consumer side, we're seeing more just overall awareness of what FWA is amongst consumers. You see a lot of marketing activity. I think that's playing into that. If you watch the last several Super Bowls, you see T-Mobile advertising their home internet services. You see some celebrities, helping to advertise that. So it's getting more out in the mainstream, more consumers know what it is. And they can, they're being more cognizant of the cost savings they can get through FWA compared to like traditional fixed services. Still seeing strong growth in B2B also with FWA. Two sides of that, both businesses using it as a main connection. So seeing growth there. We're also seeing a lot of growth too, using FWA as a secondary connection amongst businesses. A high portion is coming from that. Just keeping a traditional fixed broadband, but having FWA as a backup in case any type of disruption to service, if there's like a power outage or anything like that. They have that as a backup solution. So we're seeing a lot of activity there. So other revenue growth drivers. So we're seeing average revenue per account, ARPA. So we're going to use that acronym a few times in this presentation today. So we see ARPA expansion through premium unlimited plans, add-ons, and rate increases. Seeing more higher price points entering the market. For add-ons, look at Verizon. They have add-on subscriptions you can have through their My Plans. There's a lot of activity through that. That's helping with their service revenue growth. Rate increases also. We're seeing, the big three operators are still implementing rate increases over the past year. So that's been contributing to revenue growth. Another driver that we're seeing is equipment revenue uplift from higher device prices and increased upgrade activity. So really seeing a rebound in equipment revenue growth the last couple quarters. Couple things driving that. The iPhone 17 is a big factor. That's been a very strong selling device for Apple. So it's been beneficial to operators to their equipment revenue. Also seeing some increased upgrade activity, especially for AT&T and Verizon. So looking at those two operators, if you go back several years ago, they moved their customers to a 3-year commitment to their device installment plan. So those customers were locked into that commitment for a while. So that kind of hampered upgrade rates for a while. A lot of those customers now are free from those contracts. So that's helping with the upgrade activity much. There's a higher portion of customers that are eligible to upgrade. So we're seeing some increased device sales coming from that end. Another thing that we're seeing is bundling and convergence. So we'll be referring to convergence throughout the presentation today. In this context, it's just bundling mobile and broadband services. So all the major telcos and the cable cos are doing that now. So we're seeing, increased customer spend from that. We're seeing like a higher portion of mobile activations is also getting bundled with mobile. We're seeing that in the market, some revenue from there. It's also helping with retention also. That's been beneficial to helping to reduce churn rates for the operators. Looking at things that are inhibiting revenue growth in the market. So we see intensifying pricing pressures. Cable MVNOs have been a big factor in this like the last several years, but it's moving to the rest of the market too. We're seeing, the traditional telcos being more competitive in their pricing too, especially with Verizon and their new CEO. They've been more aggressive in promotional activity, starting like towards the end of the previous year. Later in 2025, we saw some pretty aggressive holiday promotions coming from there. Also, AT&T just introduced some lower price points in the market. So we're seeing that. We see so those things are going to have more of an impact in 2026. There's like new pricing offers. Another thing that we're seeing an impact in revenue growth is macroeconomic headwinds driving demand for lower cost plans. One thing like over the past year has been the inflationary impacts, uncertainty around tariffs, like currently, a big factor would be the Middle East conflict. So you see the rise in gas prices from that. So that's having an impact on consumers, especially on the lower end of the market. So they have some, they have less discretionary spending. So that's kind of like scaring some consumers to move to some lower price service plans, just to adjust their budgets. Then we see market maturity. So you just look at everyday consumers today, most of them already have a smartphone. That's kind of like pushing the operators to find like the new markets where they can get new postpaid phone connections from. Like the things that we talked about before, targeting, B2B segments like first responders is, steering them towards that way, younger children, like being added as part of family accounts, those type of things. And then another inhibitor we're seeing is policy and public sector impacts. So the impacts of DOGE have had an impact on wireless revenue the past year. Looking at the federal sector, there's been, pretty significant amount of mobile disconnects coming from that. Another thing is immigration policy changes. I mean, that would factor in immigration, new immigration policies under the current administration. So it would include the deportations, also reduce immigration rates. So that's having a negative impact on subscriber growth in the market. Looking at the industry, I'm more on a company by company level. So we have this ranking chart here. So this lists out the market share by the main companies we have benchmarked in the benchmark, and we also track other things like year-to-year revenue growth and in total wireless revenue is listed on this chart. So looking at the right column, so year-to-year change, this is total change in wireless revenue. You can see all of the benchmarked operators are able to increase revenue year-to-year in 4Q25. Looking at the market share, Verizon is still leading the market. They're at 35.6%. So they're still leading the industry in total retail connections. This is the main driver of that. Looking at the second and third rankings, AT&T and T-Mobile are very close in market share in 4Q25. They're both at 28.7. AT&T is just slightly ahead. Looking at T-Mobile's growth rate, that was at 11.3%. So that's one of the highest growth rates amongst these companies. But playing into that would be the UScellular acquisition. So that closed in 3Q. So some positive impacts that came from that. Then we have Spectrum Mobile and Xfinity Mobile ranking is 4 and 5. And then 6 and 7, we have Dish and then Optimum Mobile. You can see Optimum Mobile's growth rate is very high, 40.5%. But it's still a very small business compared to the other main operators competing in the wireless market. So we just had a 0.1 market share for Optimum Mobile in the quarter. So even though they're growing, at a pretty high rate, they're still like this a fraction of the overall revenue in the market. So what's happening in the U.S. wireless market? So some of the things that we're seeing. So T-Mobile continues to lead connection growth, driven by strong postpaid phone net additions in underpenetrated segments. So this has been a focus targeting the underpenetrated segments for T-Mobile the last several years. There's two main areas they're focusing on. One was the smaller markets and rural, smaller communities and rural markets. So it's been, they're gaining a lot of traction there. So at the end of 4Q20, at the end of 4Q25, they grew to a 24% market share. So multiple factors are driving that. So they've had some more like concentrated network deployments in rural markets. That's helped with that. FWA has also been like a big driver of that too. Having more limited, fixed broadband options in rural markets. Having FWA as an alternative under T-Mobile has been helpful for them getting traction also. Some newer initiatives is also helping too. So UScellular, they have historically had a strong footing in rural markets. So it's going to help T-Mobile gain further traction. I think the Starlink partnership to offer D2D connectivity is going to be a strong role play for T-Mobile also. It's going to enable 100% coverage within the rural markets. So it's going to be beneficial for T-Mobile. T-Mobile for Business is the other underpenetrated segment they've been targeting in the last several years. So it's been successful for them too. So they're still maintaining double-digit service revenue growth in that area. And they're projecting that's going to sustain until at least 2027. So there's a new segment that they're targeting now. They just mentioned on their 4Q25 earnings call. So this new segment is called Network Seekers. So this segment here, so the definition I have is these are customers actively looking to switch wireless providers based on network quality. So T-Mobile talked about this. So they say this market provides a market opportunity for 20 million accounts. So these are basically customers. They just want the best network quality. They don't care if it's like a little bit more expensive than another operator. T-Mobile is really doubling down on targeting this market. Just in their surveys, they're having much stronger network perception, much higher, positive network perception of their networks. That's really playing into that too. So another thing that's happening at T-Mobile, so there's really some shifts in their strategies. A lot of this is driven by their new CEO, Srini Gopalan. Um, he has, under the new leadership, I'd say there's more of an increased focus on targeting the higher end of the market. I think that's targeting those network seekers plays into that. There's also a lot more of a focus on cost cutting. We're going to dive a little bit more into that in some of the later slides. And also targeting like the higher end of the market. They're emphasizing more of the overall value proposition. There's going to be a little bit of a de-emphasis on, the aggressive pricing promotions. They talked about they're going to, steer a little bit away from the device promotions. And they're going to focus more on the overall value proposition that they're offering instead of, merely competing on price. They're looking at Verizon, so we see them becoming more aggressive on pricing under new leadership, signaling more of a focus on subscriber growth. So Verizon, so they have a new CEO also, Dan Schulman. Their big focus is improving the value proposition. So you look at their postpaid performance, the last several years have been lagging the market. So they've become much more cognizant. They need to be more centered on competing on price. They don't have the network advantage they did during the LTE era. So there's been some new strategies happening there. So there's been one of the aggressive promotions they're doing is a 4-line unlimited plan for $100. That's one of the first initiatives they had that actually resulted in a pretty significant rebound in subscriber growth for them in 4Q25. So look at 4Q25 postpaid net additions. That was the highest they generated since 2019. They also have very aggressive customer targets for 2026 as well. So if you look at their guidance, they're expecting to gain 750,000 to 1 million postpaid phone net additions in 2026. If you look at 2025, they gained 362,000 net additions. So they're expecting they could gain nearly triple as much postpaid phone net additions in 2026. So their new revamped pricing strategies are going to play into that. They're still in the early stages. So new announcements are going to be expected to be announced like later this year. Looking at AT&T, so convergence adoption rate grows as fiber expands. So convergence really been at the center of AT&T's go-to-market strategy. So if you look at AT&T fiber customers currently, 42% of those customers are also enrolled in AT&T's wireless plans. So they want to gain even further traction in that. So they set a long-term adoption rate of 50% of AT&T customers also bundle in wireless. We also see them playing more in FWA. They've expanded their service availability quite a bit over the last year. There's going to be more of that happening too, following the closure of their EchoStar Spectrum acquisition. They're also similar to T-Mobile. They're targeting underpenetrated segments as well. So some of the main segments they're targeting include value-focused customers, adults aged 55 and older, 1 to 2 line accounts, and SMBs. So looking at cable and MVNOs, they're gaining market share through aggressive pricing and mobile broadband bundling. So they're still very disruptive in the market. There's been a little bit of shifts. So the last several years, Spectrum Mobile has been more aggressive in their pricing compared to Xfinity Mobile. Over the past year, Comcast has also stepped it up quite a bit in their pricing. So a part of that, so they have a new CEO also within their connectivity and platforms division. So that's basically the division that's focused on the cable communication services. So that CEO is Stephen Crooney. So it's much more competitive on their price compared to how they've been historically. It's both on mobile and broadband pricing. So if you look, one of the things they're doing in mobile is Comcast is offering free lines for a year to certain broadband customers. That's something that Spectrum Mobile's been doing the last several years. It's been successful for them and getting long-term paying customers. So Xfinity Mobile's doing that strategy as well. We see lower overall broadband prices too. So they launched their 5-year price guarantee. The starting rates are much lower than what they were before. Like one of the things that they're doing is they're including gateways included with their broadband. Like before, it might have been like $15 or $20 like additional fee for that. They're including that at no additional cost. So this is some of the examples of the cable MVNOs becoming more competitive. So considering all these dynamics, we're seeing CSPs. There's four areas they're really staring towards. So the remaining slides are going to be focused on covering these four areas. So one of the things we see is convergence, increased focus on convergence. We see an increased focus on differentiated connectivity services. So like under examples of these type of services would be something like D2D communications, like what T-Satellite is doing with Starlink. That'd be an example. Network slicing is an example of that too. Because basically, types of services that are beyond typical wireless connectivity. So they may incorporate like technology, including like network slicing, incorporating 5G standalone and 5G advanced capabilities, like fall under that. We'll give more specific examples in one of the later slides. We have bifurcated pricing aligned to a K-shaped economy. So we're seeing more focus from the operators on targeting both the lower end and the higher end of the market. And then we see more aggressive cost cutting in the market as well. So this is helping to offset some of the competitive pricing pressures. As we're seeing that, it's also helping to meet operator deleveraging targets. So you see, some pretty significant like M&A, 5G fiber investments. So these cost-cutting initiatives are also playing into the operators' deleveraging goals as well. So this slide here, we're going to look more specifically at convergence. So we see convergence is becoming a more primary competitive level, becoming a primary competitive lever for U.S. CSPs. So looking at the strategy behind convergence, the main focus we're seeing the operators is leveraging convergence to create a stickier ecosystem to reduce churn. So two main ways convergence is attracting customers is through discounting pricing compared to buying service separately. There's also the convenience of purchasing services from the same provider. Like say, instead of like buying, your broadband services from a cable provider and your wireless services from a traditional telco, you buy both from the same provider. So it's definitely a convenience for a lot of customers. It's helping to attract some connection growth through that. So two main areas operators strengthening their conversion strategies. One is expanding broadband service availability, both FWA and fixed. And we see operators pursuing acquisitions. So on this table, we're looking at some of the strategies from the operators. So looking at AT&T and Verizon, so core strategy for them is expanding fiber and FWA to scale bundled offerings. So both of those companies have aggressive fiber build-outs. AT&T is looking to target 50 million total fiber locations by 2030. Looking at Verizon, they're aiming to hit 40 million to 50 million passings over the midterm. Another strategy is they're using M&A to accelerate broadband reach. Both of those companies are targeting acquisition. So Verizon, that would include Frontier. So that closed recently. So they gained 9 million fiber passings from that acquisition and also 3 million customers. So following the closure, we've seen some pretty aggressive promotions from Verizon targeting those Frontier fiber customers with Verizon's wireless services. So they have a lot of cross-selling opportunity to target to those new Frontier customers. Another acquisition Verizon made recently is Starry. So this is basically an FWA service provider that's focused on multi-dwelling units within within larger cities. So this is going to be a new focus for Verizon too, targeting FWA services in larger cities. It'd be like types of environments would be like apartment buildings would fall under that. Like condo buildings would fall under that too. So any type of building with multiple units in it. So it's going to be a target area for Verizon. AT&T, there's some acquisitions too. So Lumen Mass Markets that closed recently. They gained 1 million fiber customers and 4 million fiber locations from that. And then there's also the pending EchoStar spectrum transaction. So they're going to gain select 3.5 gigahertz spectrum, as well as 600 megahertz spectrum for that. So it's going to support their, standard mobile MBB service, but it's also going to be used for FWA as well. So it's going to help AT&T to offer FWA on a more broad scale nationwide. So they're going to have, FWA available on a much larger scale, especially like in the markets where they're not offering fiber services. So it's going to definitely be beneficial to their conversion strategy. Looking at T-Mobile, some similar strategies compared to AT&T and Verizon. So they're bundling broadband, building broadband scale to compete beyond wireless. So they have some pretty ambitious targets within broadband. So one of the things they're looking to do is expand fiber to reach 12 million to 15 million households by 2030. A lot of that's going to be based on their recent Lumos and MetroNet acquisitions. And they're also targeting 18 million to 19 million total broadband customers. That includes both FWA and fiber customers by 2030. So that compares to 9.4 million at the end of 4Q25. So basically, they're looking at about double their broadband subscriber base compared to now to 2030. So they're still expecting very aggressive growth within broadband. We see T-Mobile leveraging acquisitions to expand into new markets. So Lumos and MetroNet, those are the two acquisitions that are most commonly talked about. There's another acquisition they made recently, U.S. Internet. That one was a little bit under the radar, but that's another acquisition they made. It's basically a pure play fiber provider. That company is focused on serving the greater Minneapolis area. T-Mobile is also open to additional fiber M&A if economically favorable. So they pursue other M&As, most likely going to be like similar to like MetroNet and Lumos. Companies that are pure play fiber providers, they're going to be less interested in acquiring a broadband company that has like a lot of legacy assets that wouldn't be something strategic to T-Mobile. Then looking at cable MVNOs, so we're seeing them using mobile broadband bundles to drive retention. So if you look at the cable co's wireless strategy, it's more about retaining broadband customers against FWA and fiber competition and creating a highly profitable standalone segments. So both Spectrum Mobile and Xfinity Mobile have become profitable the last several years, but it's still very small profitability compared to the larger cable co business. So it's mostly being used as a lever to retain their larger broadband subscriber base. That's how they're leveraging that strategy. Another thing we're seeing with the cable MVNOs, they're expanding mobile B2B strategy and scaling cross-sell opportunities. So we're expecting to see some pretty significant disruption in the B2B market from the cable MVNOs. This is largely due to both Charter and Comcast. They signed a new MVNO agreement with T-Mobile covering the B2B market. So through this agreement, they're going to be able to target B2B customers of up to 1,000 lines. If you looked at their previous agreement with Verizon, that was limited to 20 lines. So they're moving from the opportunity to target accounts of 20 lines to 1,000 lines. And B2B, so they're going to become a much stronger player within the mid-market segment. So it's going to cause some disruption to AT&T and Verizon there. And the cable operators are also scaling cross-selling opportunities. So we still see the broadband expansion, both in the largest cable companies like Comcast and Charter. BEAD funding is going to help out with that too. That's going to help with broadband expansion. There's going to be some new cross-selling opportunities arising from that as well. So looking at differentiated connectivity. So building on convergence, the next layer of competition is differentiated connectivity, where operators use network capabilities to create unique services and experiences beyond basic wireless access. So listed out some of the main examples that we're seeing of differentiated connectivity. D2D satellite connectivity, that's one of the main examples we're seeing. The T-Mobile has gained a time to market advantage with the Starlink partnership. So the T-Satellite service launched last year. They're getting like some pretty strong traction with that. So they're monetizing that. There's two ways. You can add it on to one of the lower tier service plans. You also have the opportunity to get it for free if you subscribe to one of the higher tier service plans as well. So it's kind of like an incentive to steer customers to the higher price plans. We also see AT&T and Verizon, they're planning on launching their D2D satellite services with AST Space Mobile later this year. FWA network slice, this is a new use case we're seeing. So Verizon was the first operator in the US to launch an FWA network service. So this is under Verizon Business. So basically, it's optimized FWA connectivity. So this is ideal for like some of the high demand use cases like AI workloads. It's one of the areas they're targeting with this service. The other thing is businesses have stringent SLA requirements. So they have like certain demands for like network speeds or for latency requirements. They're able to fulfill that through this FWA network slicing. So it's going to help Verizon attract some new customers to that. We also expect T-Mobile. I think it's very likely T-Mobile will launch something very similar to this service soon. One with FWA being the predominant broadband medium that T-Mobile is rallying behind. So it's very likely they'll have an FWA network slice soon. Also, to help meet their goals to grow in the B space also. So another one is live translation. So this is a brand new service that T-Mobile launched. So this is an AI-powered voice calling feature that enables real-time translation of phone calls in more than 50 languages. So this just launched under beta. The long-term pricing strategy hasn't been disclosed yet. I'm imagining it's going to be something very similar to what they did with Starlink. You know, I think it's very likely they're going to include this service as part of the higher tier unlimited data plans to incentivize customers and also offer it as an add-on option also under the lower tier service plans. We see network slicing for B2B applications. This is something that T-Mobile's doing. So they have a new B2B service plan called Super Mobile. They're offering network slicing under that. So that's basically giving enhanced connectivity for B2B applications. So this is targeted at verticals that need greater reliability and performance. So like some of the verticals are targeting include aviation and transportation, energy and utilities, media and field reporting. For example, they have CNN and Fox Weather both as customers. So it's very like ideal. If you're like a field reporter, it's very like critical that you have, you know, the highest reliability coverage if you're reporting the news. So there would be like an example of where network slicing would be very valuable for certain B2B use cases. Premium network priority. This is referring more specifically to AT&T. So they have a service called AT&T Turbo. It's not exactly network slicing, but it's basically a service that gives customers higher network priority that delivers better performance, including lower latency and more consistent speeds. This is something AT&T is offering as a $7 per month add-on service. So they're targeting use cases like gaming, live streaming, telehealth, and retail. Public safety network slicing, that's another like use case we're seeing. Both Verizon and T-Mobile have dedicated network slicing services for first responders. That's just giving them enhanced reliability. That's, you know, it's been helpful for those operators, helping to compete against AT&T FirstNet. Also seeing network slicing within the security space as well. One example would be T-Mobile. So they have a dedicated SASE solution. They're offering a network slicing security slice. So basically this offers enhanced security for that SASE platform. We're also seeing multiple different video calling network slicing use cases in the market. One of the main examples would be Verizon. They have a dedicated video calling network service. So it's called Enhanced Video Calling Services. This basically enhances connectivity for video calling apps such as Zoom and FaceTime. So taking a look at how operators are monetizing differentiated connectivity. So it's helping CSPs differentiate as AT&T and Verizon are closing the gap with T-Mobile's mid-band 5 coverage. So if you look at the US wireless market, all those three operators are providing about 300 million, give or take a little bit for each operator, in mid-band 5 coverage, mid-band 5G coverage. So they can't really differentiate it by promoting how much pop coverage they have anymore. So we're relying more on these differentiated services to attract customers. So we're seeing increasing ARPA by reserving services to premium plans or add-on options. So these differentiated services are focused on attracting customers needing experience-based differentiation. So like customers needing like enhanced performance, latency, reliability. So we see operators both targeting both consumer and enterprise use cases. Some of these like services can like cross over into both consumer and B2B. The live translation service, for example, for T-Mobile, they're initially targeting more as a consumer use case, but definitely like B2B use cases that can be targeted through that service as well. Say like a call center with, that might experience like a lot of, customers with speaking different languages. Like that type of service would be very beneficial, those type of use cases. And we see direct-to-device connectivity, D2D satellite connectivity will curb CapEx and rural build-outs. So this is going to be a benefit to operators, looking at, rural markets out on the outskirts. It's not very much population. It's not like a very, there's very low ROI to do a massive, cell site build like in a very rural area. But they can rely on their D2D services to fill in those gaps in network coverages without like allocating significant spending on site build-outs. So the next slide, we take a little bit of a look at the pricing strategies in the US wireless market. So to sustain growth in a maturing market, operators are no longer focusing on just one segment. They're competing at both the high end and the value end simultaneously. So why are operators increasing focus on targeting both ends of the market? So one reason would be the K-shaped economy pushes CSPs to adapt their offerings to cater to each arm of the K. So if you look at the U.S. economy, we consider it like a K-shaped economy. So basically, if we were to look at the top 10 to 20% of households and businesses in U.S., they are doing exceptionally well. So operators are targeting, this higher value side of the market. So they're offering the premium options, premium service options to these customers that's helping to grow ARPA. But if you look at the other side of the market, the bottom 80 to 90% of households and businesses are doing progressively worse under the current economy. That's really steering the operators also to offer new lower price options catering to these customers. They're also seeing market maturity is limiting organic subscriber growth, requiring both ARPA expansion and share capture. So there's less organic opportunity there. So, targeting the higher customers of higher, more expensive price points is going to have to boost ARPA. At the same time, there's not a lot, there's a less of a pull to gain net new customers. You're going to need to be more focused on gaining share capture. And the more aggressive pricing points are going to help on that side of things. We see the premium segment remains critical for margin expansion. We see intensifying pricing pressure. Some cable MVNOs is forcing telcos to defend the low end. And we see broadband options are increasing, spurring competitive bundled pricing to defend and gain market share. So you look at a given market, they may have like several broadband options. Like for example, there might be, 2 or 3 FWA broadband options. And there also might be like the cable option. There might be multiple fiber options as well. There might be like some legacy like DSL services as well. That's creating some pricing pressure. And a lot of these companies are also offering like converged service offers as well. So it's creating a lot of pricing pressure there. So it's really, steering operators to be more competitive in their pricing to contend with that. So taking a look at some of the high-end and low-end pricing strategies in the market, we look at the high end of things, so we see the new higher tier unlimited plans that are launching. That's helping with the ARPA growth. We see operators reserving features for premium plans. Some of the examples would be Verizon. So their 5G ultra wideband coverage, so that's their mid-band and millimeter wave 5G coverage with the faster speeds. That's on the higher tier unlimited data plans, where the lowest tier option just has low band 5G. Another example would be T-Mobile Satellite. They're including that at no cost. They're reserving that at no cost for the higher tier unlimited data plans. And we see early device upgrade options is another example. Like T-Mobile is doing that. If you're like on their most premium plan, you could update your device every year, where the next lowest plan, you can update it every 2 years. That's the way, another like example of customers like reserving features onto the highest tier unlimited data plans. We also see operators monetizing add-ons and premium features. So examples would be Verizon My Plan subscription perks, AT&T Turbo, international plans would be another example. There's a more, a lot of cases. So those are the higher end consumers, that are doing more international traveling. That's hitting that market. We're also seeing continued rate hikes that grow average revenue per user. So on the low end, strategies that we're seeing in the market. So we're seeing the heightened promotional activity within the U.S. wireless market. We see the new things that, new promotions we're seeing Verizon do. Cable MVNOs are still very aggressive with promotions. We see new entry-level post-paid plans launching. So we call these like essentials type of service plans. So T-Mobile has like lower end service plans called essentials with the just very basic features. It doesn't have the high-end features like the streaming services or high data allotments or mobile hotspots. It's just targeting customers that just want basic connectivity services. AT&T also launched a new entry-level service plan as well. AT&T Value 2.0, it's similar to like what T-Mobile is doing with their essentials plans. It's a very low price point with less features to target the lower end of the market. Another example would be T-Mobile. So they have a new feature called Easy Switch. This is basically a feature within the T-Life app. So basically, makes it easy to compare the cost savings you'd receive from T-Mobile compared against AT&T and Verizon. Also gives an easy platform to switch carriers also. Another thing we're going to see is Verizon has talked about this like in their latest earnings call. There's not much detail, so they said they're launching a new value proposition. That's how they titled it in the first half of 2026. We don't have the details, but I think it's likely going to be included overhaul their overall pricing structure to be more competitive in the market. We see aggressive pricing offered via prepaid brands such as Cricket and Boost Mobile. Mint Mobile from T-Mobile is another like aggressive player we're seeing in the prepaid market. We see new converged service plans launching, such as AT&T One Connect. So this was just announced this week. So this is basically a new service plan combining both mobile services with AT&T fiber. So it's a very competitive price point. It's comparable to what the cable MVNOs are offering through their converged service packages. There's some caveats to it, though. One is it's just bring your own device. So you're not going to get like any device promotions off of this new service from AT&T. And it's also available just to new customers. It's not available to existing customers yet. And another example we're seeing is cable MVNOs offering free mobile lines for a year. Basically, the strategy here is, there's going to be like a little bit of a hit to profitability offering mobile lines free for a year. But the long-term strategy is that they become long-term paying subscribers. So Spectrum Mobile has done this for several years. It's been successful for them. Xfinity Mobile has followed down this trail too, really the past year. Then looking at cost-cutting initiatives in the U.S. market. So we see a lot of aggressive cost-cutting in the market. We'll have some examples popping up in a minute. But why operators are doubling down on cost-cutting? Some of the main reasons we're seeing is the inflation and macro pressures increasing cost burden. We see slowing subscriber growth, increasing reliance on cost cutting to drive margin expansion. We see intensifying pricing pressure, challenging profitability. We see high 5G, fiber, and M&A investments driving the need for deleveraging. We see AI and automation enabling structural cost reduction, improved customer experience. So looking at some of the major initiatives here, I'll just touch on some of the bigger things that are happening. So Verizon, as I said before, they're very aggressive with their price on cost reduction under their new CEO. So one of the things they're targeting is $5 billion in OpEx savings in 2026. The key initiatives there include workforce reductions, AI-driven automation, and asset rationalization. So that'd be like, decommissioning legacy wireline assets would fall under that. Non-strategic business segments would fall under that too. So they had very pretty significant headcounts recently. So they reduced their headcount by 13,000 in 4Q25. Also see a lot of interesting things with T-Mobile too, especially with their new CEO. They're doubling down on cost cutting and also their AI and digital transformation initiatives. So one of their targets is to generate a $3 billion uplift to EBITDA by 2027 through their AI and digital initiatives. So a big focus for T-Mobile is steering their customers to the T-Life app. So they're already at 100 million installs. So one of the things that they're doing, for example, if you're to visit a T-Mobile store for if you want to purchase a new device, one of the first things they'll have you do is download this device. And then once you work with the employee to make the device purchase, a lot of that transaction is done through the T-Life app. So it's really, steering the customers to the T-Life app, getting those customers accustomed to do all their transactions through that app. So the long term, they're expecting nearly fully digital upgrades and activations that are going to be done digitally through the T-Life app. Also some major things going on with AT&T and cable MVNOs in this slide as well. Wrapping things up, the 2026 industry outlook. So we see the U.S. wireless market is entering a more competitive, efficiency-driven phase. We see revenue growth will persist, but increasingly rely on ARPA expansion, bundling, and premium services. We see mobile and broadband bundles will account for a growing portion of connection growth. Differentiated connectivity is emerging as a key lever for monetization and competitive positioning. We see operators are targeting both premium and value segments to address a K-shaped economy. We see pricing pressures will continue to intensify competition across the market. And we see cost optimization and AI-driven efficiency are critical to sustaining margins amid slowing growth.